All right, so we're recording. So I'd like to introduce you to our guest speaker today. Our guest speaker has been working with us for several years. I don't even know how long. And we all know what the market, some of us may know or remember what the market was like back in 2007, 8, 9, 10, 11, 12. It kept going. But Alan worked with us and our agents very closely through that market and since that market on short sale negotiations. Before that market and before the regulations came about, realtors used to be responsible for negotiating with the banks on behalf of their clients to get them out of these distressed property situations. We had authority to call the bank, to negotiate with them, the third-party payout, all of that. Then real estate regulation came around and they said, nope, you guys aren't financial advisors. You're not licensed to do financial advising unless you sit through this class. And they took that right. Agents took it off of our plates, which was glorious, really, because it was horrid. For anybody in here that negotiated a short sale, you know how awful it was. So along comes Alan. Alan is and he'll tell you all of his credentials, but he is a short sale negotiator. He's an attorney.
And a CPA.
There you go. And he handles that process for you. He is professional. He is extremely good at what he does. So I'm going to let him introduce and talk about what he does and how we're seeing them come back around already.
Right. We're seeing them come back. I mean, good. Thank goodness. Yeah. Yeah. It seems like, well, I'm going to go through that in a minute, but so in Maryland, you have anyway, I'm Alan Weiner and our company's called Short Sale Services, and thanks for having me. This is my first live in 18 months, I guess it's been. It's good to be back.
Yes.
It's good to see people. But anyway, so what we think is going to happen in the market, and it's not just, and it's people a lot smarter than me, we think that the distressed property market's going to really go crazy starting, we thought June, July, but it's probably going to be more August, September. And what's going to drive it is the end of the moratorium on foreclosures and rentals and everything else. And really lenders in Maryland, nobody could foreclose. So if you looked in Maryland and notice of defaults, which we're going to talk about in a minute, but in Maryland, notice of defaults are the first step of a foreclosure process. And it's great in Maryland because it's public record, which again, we'll talk about. But notice of defaults in Maryland, 3 years ago, we're probably, I'll just give you Prince George's County because I haven't looked at that recently. We're probably 2,500 at any given time if you looked. And then over the last 18 months, if you looked, it was maybe 3 or 2 or 5. And if you look now, it's like 660. So that's just Prince George's County. So it's not where it was, but it's certainly, so these people, what's happened is for the last 18 months, if Bank of America has said, you don't have to make your mortgage payment, people weren't making their mortgage payment. Or if you called Bank of America and said, I lost my job, or I've lost my hours, or you were just realized I'm going to take advantage of a situation. I'm not going to make my mortgage payment for the next 18 months. So now it's coming due. So at the end of June, you either have to write a check for those 18 months, or you've got to work with your lender and do what's called probably add it to the back end. So if you're 18 months at $2,500, that's $40,000 is getting added to the back end. And to do that, you have to make 3 on-time payments. So whether it's July, August, September, August, and if you don't make 3 on-time payments, you're done and the foreclosure begins immediately. So that's where it's going to come from. Yeah, please, just anytime you have a question.
The forbearance that they offered everybody.
Yeah, the forbearances are ending. So now, and as we all know, being in this business, of course, if you go to somebody and you say, you haven't made a payment in 18 months, where's that money? Hopefully we would put it in our bank account. A lot of these people have spent it. And then if you also look, the New York Times did an article about 3 weeks ago, that default rates are the highest they've ever been in the history of keeping track of it. And they're insane in the African American community. The number is, if it's here, it's there. So it's coming. I mean, it's coming. And I don't know if we're going to get 2007, 8 numbers again, but we're going to see it. And I probably have done 25 seminars in the last 60 days because brokers like Tina have seen that it's time to get you all acclimated because it's coming. So that's where we think it's going. let me talk to you a little bit about basics. Some of you look pretty young. You may not have been around in 2007. So I'm going to start real basic. And if I, please interrupt me anytime. So a short sale basically is when the amount of money owed to the lender, net after everything, is less than is owed. It doesn't matter if it's $1 or $1 million. If someone can't pay it, it's short. So I joke, and it's kind of like being pregnant. You can't be a little pregnant. You can't be a little short. You're either short or you're not short. You're either pregnant or you're not pregnant. So, and the reason I say it's like that because, okay, let's just use an example. Mrs. Jones owns a property. She owes $300,000 on it. You go out and you see it. She wants to sell it, and you go out and you see it, and you say, well, I need to sell this for $330,000 to get her out. So if you can't sell it for $330,000, whether you sell it for $250,000 or $315,000, she's short, right? Now, if she has two lenders, there might be enough money to pay the first lender in full, but there's not enough money to pay the second lender in full. So that's where we will, we'll deal with that. It's not your problem. So that's where a short sale is. That's basically what a short sale is. Now, how does one qualify for a short sale? The lender is going to require that they see all their financials. So they're going to want bank statements, tax returns, pay stubs, and a hardship letter. And unlike 7 or 8 years or 10 years ago, whenever it was, when you really needed to have a really terrible hardship going on in your life, that's really kind of gone away. The lender just wants you to say that, you show them that you just either can't afford it, don't want to afford it because something's come up in your life. So what we've seen, what a hardship might be is, I lost my job. My husband lost his job. I'm losing my job in 3 months. Or my hours have been cut because of COVID. During COVID, I wasn't working, and all my savings are gone. So I can't, I don't think I'm going to be able to afford it. My mother is sick, and I need to move to Florida to help take care of her, so I need to get rid of this. I now have 3 kids. When I bought this, I had 1 kid, and the house is not big enough. We live in Baltimore City, and the neighborhood's really gone bad, or anywhere. It doesn't have to be Baltimore City. Live anywhere, and the neighborhood's not safe for me to be in. The bank's accepting that right now. Divorce is an automatic. Divorce separation, 100%, no questions asked. So that's some of the examples. Illness, all the terrible things that happen in life, death, etc. But it doesn't have to be that bad. And generally, when I speak to a seller without committing mortgage fraud, we can find something. There's always, my kid needs braces, my kid needs to go to a special school, whatever it might be. So that's the hardship. Then we look at their financials. And I don't care if they make $1 million a year. If they spend $1.1 million, they have problems. And the banks, we're not the morality police telling them how to spend their money or not spend their money. You might have some clerk at Bank of America making $12 an hour, and it's going to go, gee, look at where they're spending their money. But it's not no one's going to judge. Well, they may judge them, but it's not going to go into the decision-making process. So what we do is we will take everything off of your plate, as Tina was saying, and do everything. We will negotiate with the bank. First thing I'm going to do is talk to your seller. Say, hey, Mrs. Jones, what's going on? Tell me your situation. They tell me their situation. We will then set the bar, what they can expect. Our ultimate goal is for them to get what's called a deficiency waiver. So a deficiency waiver says Bank of America is not going to pursue you for the balance. So generally, that's what we get in 99 out of 100 times. The only times we don't get that is if the lender is a credit union, and the credit union is state employees, Navy Federal. Those credit unions don't follow federal guidelines, and they may want to come after Mrs. Jones for some of the money. So they may say, okay, we're going to let you sell the property, walk away from the $100,000 that you're going to be short, but we want you to sign a $20,000 promissory note, pay us $60 a month for 3 years. So that might, but if I know that Mrs. Jones has a credit union as her lender, I will tell her that on day 1. So on day 300 or 150, she's not surprised to hear that. Got that? Everybody got that? Any questions about that? So, and we'll negotiate the best deal we can with the credit union. Let me just see what else we're doing here. So our fees, unlike some of the people that do what we do, our fees are paid by the bank, just like your fees are paid by the bank. So $300,000 sales price, 6% to you guys, $18,000. We ask for $5,250 in every deal. We average about $2,800 on every deal. The bank will beat us up. You have my word as the owner of the company that our fees will never hold up your deal. So we're not going to go, well, we got an approval, but we're not happy with our fees, so we're not sending the approval out. We're going to keep negotiating. Won't happen. I promise you today that doesn't happen. We will take our fees. We have a pretty large volume. We want to maximize, but we're just going to move on. We're not going to come after your commission. We're not going to go to the seller. We're not going to go to the buyer. Some negotiators, if you look in Bright and Maris, it says 1,500, 2,000, 2% premium to the buyer to pay the negotiator. So if they sell it for 300, they want 306 to pay the negotiator. We don't do that. So you can list it as no premium. And also when you take a listing on your side, I want you to list it at 3.5 to your side and 2.5 to the other side. And the reason we do that is there's always going to be more work. There's, as much as I tell you, we're going to get all the loan document, all the financials from the seller. There's always going to be something where I'm going to call you and say, hey, can you reach out to Mrs. Jones? She's not sending me her bank statement. Can you go get it for me? Or you're going to get to closing, and you all been doing this long enough, you understand, you're going to get to closing and there's a water bill. The first person everybody looks to is the agent who's making all those thousands of dollars. They want you to pay the water. So if you have 3.5%, it gives you a little cushion. Or you might have to pay to help her clean something or get something out of the house. So 3.5% gives you a little cushion. We're always, not always, but 90% of the time we're going to get 6% on the deal. If the numbers get tight, I might call you up and say, the bank's looking for an extra $4,000. Where can we make this work? So that's how your listing should work. Listed at market price, how you would list any other property. The days of banks giving away short sale are over. They're going to sell it at market value. So the bank, what they're going to do is once I get their financials in, we will send everything to the bank. All the while you're looking for a contract. You're looking for a buyer. Once you get a buyer, or right before you get a buyer, at some point, the bank is going to do what's called either a BPO or an appraisal if it's a government loan. The BPO, for those of you who don't know, it's a broker's price opinion. So they're going to hire a broker from God only knows where to come down to your property and value it. So that broker, anybody do BPOs in here? No. Okay, so they get about $60 for a BPO. And I've seen this work. Here's the way it works. So I use Mitchellville. You guys know Mitchellville in Prince George's County? So if you ride into Mitchellville, it's a beautiful community. There's gated communities, BMWs and Mercedes and Teslas at every driveway. The kids playing baseball out front. It's a really beautiful community. So the guy from Frederick that's coming down to do the BPO just drove 70 miles to do a BPO to make $60. He rides through this neighborhood and goes, wow, that's a nice house. That's a nice house. And he now has to go into this house. He's going to take 3 pictures. The bones are great. Take 3 pictures and get out of there because he doesn't want to be there because he's only making $60. So he doesn't know that there's mold in the basement or water in the basement, that the deck out back fell down, that there's 3 holes in the walls upstairs or anything else that's going on with the property. So it's your job, if you take nothing else out of this 45 minutes to an hour we're going to be together. If you're doing a short sale and you get a BPO and you have a listing and the BPO agent calls you, meet the BPO agent at the property because you have to point out all the defects in the property. Because if you don't, that Mitchellville house, they're going to value at $550,000 and you're going to call me and go, $550? I got it listed for $450 because I can't sell it. I said, well, did you meet the BPO agent at the property? They're going to say no. So tell me what's wrong with the property. Well, there's mold in the basement. The guy didn't go in the basement. There's, all the things that can go wrong with the property. And you and I are going to spend the next 90 days fighting with the bank over this $550 value. So do yourself a favor and meet the BPO agent. They love it because it makes their job easy. Give them 3 comps. Say, okay, there's a 510 comp, but this had a brand new kitchen. Our kitchen is falling apart. So meet the BPO agent at the property. Okay? Everybody get that? All right. So, All right. So if we get a bad value, and we often do, even if you meet the BPO agent at the property, we might get a bad value. And you're going to call me and say, we can't sell it at that price. So here's what we have to do then. We will list it at the price that the bank gives us. You'll adjust your listing price. You'll put it pre-approved at 520 or whatever the number is, and you're going to get no activity. And in 30 days or 20 days, I'm going to call the bank and say, here's the showing report. There's zero. Or people notes saying, great house, way overpriced. So we'll just building our case to prove to the bank. Or we might ask you or somebody to spend $350 and get an appraisal done. Now, in a short sale listing, sellers don't want to spend $350. What's that?
Charges $350,
Or whatever the number might be.
right?
$500. What is an appraisal these days? $500.
Yeah.
Okay.
450.
$455. So that's the way we work. Or if you get a buyer that comes in and submits a contract, and then they do the BPO and the numbers are different, we might use the buyer's appraisal to get it. So it's a battle. So we need to get a good value up front. When you go to a short sale listing, you're going to be asked a couple questions. So the first question you're going to be asked is, should I make my mortgage payments? And the answer is, because we all like our licenses, the answer is yes. And the answer is really, do what you can do, Mrs. Jones. I mean, if it's between putting food on the table and paying your mortgage, you got to make that decision. But I'd like you to do everything you can to make your mortgage payment. You don't want to advise Mrs. Jones not to make her mortgage payment, because short sales are not a guarantee. They're a privilege, not a right. So you might get down 6 months down the road and you told Mrs. Jones not to make her mortgage payment. The short sale gets denied, and now she's 6 months behind, and she's going to come screaming, you guys told me not to make my mortgage payment, and I don't have 6 months of arrearage. So we don't want to tell her not to make her mortgage payment. The second question she's going to ask you is, well, I've done some research on the internet, or I talked to my neighbor and they did a short sale and they got $10,000 at closing. I don't know if anybody heard of that, where like incentive relocation money. So back in the day, they were giving relocation money for sellers. That went away, that's how long I've been doing it, under the last president. Not this one, under the last one. That went away. So it was under Biden and Obama. I'm sorry, not Biden. Bush and Obama gave it. They gave it under executive order. Trump took it away. So it's no longer available, and now the Congress won't even address the issue. So it's no longer available. So it's a negotiation. So back in the old day, if you sold your principal residence, the bank was giving you $10,000 to get started again. And the reason they were doing that is Mrs. Jones was selling her property because she lost her job. She's not getting any money out of this. Where do we expect her to go? She's going to be homeless. So the government came up with this program. We'll give them $10,000 so she has the money to go rent a house or an apartment and put food on her table and get her life started again. It's a great program. It really was a great thing. So now it's gone. So now it's a negotiation. We ask for $10,000 on every deal, and we're C between 0 and 5. And there's no rhyme or reason. We get the woman who was very sickly and lost her job, whose husband passed away, who gets 0, and we get the guy whose income went from $500,000 to $450,000, and they're giving him money. There's no rhyme or reason to it. So we ask for $10,000 every deal. So the moral to you all is don't promise it. There's a guy down in Exit, down in college, Laurel, that was passing out flyers saying, we'll get you $10,000. And he got called in front of the board and got fined. So do not do that. But if they ask you, yeah, we'll negotiate it. It's not a guarantee. We will try it, but don't count on it. Okay? So then what happens to your credit when you do a short sale? So versus a foreclosure, let me say this. On your credit report or their credit report, it will say paid and settled for less than the amount owed. It's not going to say you owe us money. It's not going to say you defaulted. It's going to say paid and settled with a 0 balance. So if you look at your credit report, it's going to say, so it's almost like I know I've done it, where I've negotiated with a collection agency over some doctor's bill I didn't even know I had. All of a sudden you get a letter saying you owe us $300 when your kid had a checkup 4 years ago or 10 years ago. So you say, I don't even know what this is, but I'll give you $200, and it goes on your credit report as paid and settled. Zero balance. You don't owe them any money. So your credit will take about a 70-point hit when it gets reported, but it starts going back up the next day. So if Mrs. Jones pays her car payment, her visa, and everything else, within a year, she's back to where she was. So as opposed to a foreclosure or bankruptcy, which is going to stay under credit for a long time. And around here, we deal with security clearances and government military clearances. Short sales are fine. Foreclosure, bankruptcy, you lose your clearance. Short sales will not lose your clearance. So, matter of fact, there used to be a program for the military to do a short sale. Basically, did not have to provide any financials. That's gone. But they still have to go through their normal process, but it will not take away their security clearance. Yes.
So today, if a person comes to you and they have bankruptcy, if they're 2 years from that seasoning date, they can go FHA. If they want to go conventional, they have to go 4 years. Is this anything like that, or within a year if your credit's back?
It's probably the loan officers are telling me 2 years, conventional or FHA or VA, VA, 2 years. So, I've been doing this long enough, and I don't know if Tina, if you've seen it, but where you take a listing. I know I've done it with Bob Fry. You take a listing, you do the short sale, you help them find an apartment to rent, and then 2 years later they call you and you're buying them a house. So you get triple dipping. So it's one transaction turned into 3 transactions. It's a great thing. So
while a person's going through a short sale, and maybe you mentioned this and I missed it, I'm sorry if I did, they're staying current on their mortgage, correct? Or did they stop paying their mortgage?
In theory, they should be, but 99.9 out of 100, they're not.
You said after 3 times they missed that payment.
They're going to foreclosure immediately.
Yes. So
Yeah.
Recommendation: you got to keep paying mortgage.
Yeah, but with the people you're going to get in this market are people who have not paid their mortgage, who don't think that they're going to foreclosure, but all of a sudden now foreclosure's coming. That's the market we're getting into.
Once you're in foreclosure, can you still?
Yeah, good question. That's one of my notes. Thanks. So yes. So in Maryland, what's called a notice of default is the first stage. So it's Bank of America sends a letter out, says, "Hey, Mrs. Jones, you've missed a payment, or you may have missed 20 payments. Just depends on when they get around to it." So remember, your obligation is to pay your mortgage on the first of the month. On the first of the following month, you're in default. Now, the bank might not do anything about it, but you are in default. On the first of, July 1st comes, you haven't made your payment. August 1st, you're in default. Okay? So August 1st comes and you haven't made your payment. In theory, Bank of America send out a letter saying, if you have 60 days to bring this current. If you don't, we are starting foreclosure. Now, in reality, they're not. It's probably going to be 5 months of default and then another 5 months after that, but it doesn't matter. In theory, so once you're in a notice of default, you have 60 days to catch up. If you don't catch up, we are then going to refer it to an attorney who will then start foreclosure proceedings. So then you probably have, another 6 to 8 months before they're going to kick you, before the foreclosure is going to go forward, and then another 4 or 5 months before they kick you out of the house. So in all, it's probably 18 months of not making a payment. However, I will tell you that Mrs. Jones is due for her June 1st payment. She gets a call from Bank of America. She gets a letter from Bank of America, and then another couple calls. On July 1st, she's in default. She's scared to death. She's never done this before. She's always paid every time. When she gets home from work on July 1st, she's driving around that corner. She thinks her stuff is on the street. I can promise you that. They are scared to death. They don't know the game. Some of them do, but they don't know that. They just think, holy crap, July 1st comes, my kids are going to be homeless. I don't know what to do. So not that we want to take advantage of people in that situation, but we want to take advantage of people in that situation. So Mrs. Jones, you go to Mrs. Jones, she's scared to death. Okay? So if you get a call from somebody who says, I haven't made my June 1st payment, what do I do? If they're upside down, you have an opportunity there. So the other part of it is how far along, how close to a foreclosure can they be before we can do anything. So it's usually within 3 weeks of an auction date. So if they call you up and say, hey, I've got an auction, July or July 15th, can we do a short sale? Probably not. If it's July 30th or August 1st, yes, we probably can. Now, the only way to stop an auction once it's on the books is to do a bankruptcy. Bankruptcy will automatically stop it. So you can give them the option of filing bankruptcy, which doesn't always mean paying a lawyer $5,000. They can go to the courthouse and file their own bankruptcy, and it dismisses itself if they don't follow up with it. So I tell people, if you want to do that, go to the clerk's office in Greenbelt or in Baltimore and tell them you want to file a bankruptcy, and they'll tell you how to fill out the papers. So that stops the auction immediately. Gives us the opportunity to do to do a short sale. Any questions? Okay.
Let him have that conversation. You don't
Yeah.
tell them how to file a bankruptcy and stop everything.
Okay, so we talked about, so you can do a short sale. Everybody know what a reverse mortgage is? So reverse mortgage is for people over, I think it's 62. They basically live off the equity in the property. They don't have to make a mortgage payment. The equity every month, the lender will take the equity out of the property and use that to basically pay the mortgage. So they borrow $300, the property was worth $450 at the time. So after month one, they owe $302. After month two, they owe $304, et cetera, et cetera, et cetera. And so people a lot smarter than me actuaries will come up with numbers, say it works if Mrs. Jones doesn't live past 74 years old or whatever the number is going to be. So if Mrs. Jones does live past 74, she's upside down. Or if the property's going down in value, she's upside down. So now Mrs. Jones needs to move to a retirement community or a senior home, or she passes away. So the family calls you and says, what do we do? She now owes $460,000 because she lived to be 80 years old, and the property's only worth $410. What do we do? Reverse mortgage, we can do a short sale. It's a perfect thing to do. They're easy because there's obviously no financials that are needed because the person passed away or they're not working. We can get it done. The only thing the bank cares about is selling it at market value. As long as you sell it at 96% of what they think the value is, they will do a short sale. Okay? And it's very easy. You get full commission. We get paid. Everybody walks away happy. No liability. Yeah.
And the estate doesn't get taxed on
No.
the income tax?
No.
Nice.
Yeah, reverse mortgages are great. You can do it on investment properties. So if homeowner lives in Baltimore but owns a property in Columbia, they've been renting out for a few years. They say, I'm tired of this thing, or my renters are moving out and they trash the property. I don't have $10,000 to fix it up, or I'm moving to New York and I don't want to manage a property in Columbia. Short sale, you can do it. And again, it's easy. They can live in $1 million property in their residence, but if they can prove that they don't have the money to rent, they can't rent it, or if they do rent it, they can't get enough to pay the mortgage and they don't have the money to fix it up or whatever, we can do a short sale. Okay, so you asked about tax consequences. I'm going to just really briefly touch on this, and I'll just let you know that leave this to me to discuss this with your seller. But so if Tina owes me $1, and I say to Tina, you know what, Tina, thank you. We've been friends for a long time. Don't worry about that $1. In theory, I'm supposed to give Tina a 1099, and she's supposed to pay tax on that $1. So if she made $50,000 this year, she's now made $50,001, and she should pay an extra 20 cents of tax to the federal government. Everybody follow that? Simple? Okay. So if Bank of America, you owe Bank of America $300,000, and they take $200,000, there's a $100,000 difference. So instead of Tina's $1, it's now $100,000. Bank of America is going to send Mrs. Jones a 1099 for $100,000. And she's going to go, where did I make $100,000? I never worked for Bank of America. How come I got a 1099? So they're, in theory, if they made $50,000, they now have made $150,000, and they got to pay tax on that money. So that happens in every short sale, except that in the old days, it was exempt, but now it's not exempt anymore. But no one has to pay tax on it because it's called the insolvency clause. The insolvency clause in the IRS basically says if you owe, if your liabilities are greater than your assets at the time of the transaction, we're exempt you from the tax. So almost everybody that does a short sale is exempt because their largest asset is their home. And if their home's upside down, they're upside down. So the short answer is, let me worry about it. I will explain to them that they don't probably have to pay the tax on it, but I will make sure they understand it. Okay? Any questions about that? Okay. So, I talked about, so when do we want to get involved? We want to get involved as soon as we know that that you know that it's a short sale or maybe a short sale. So what I suggest is if you get a call or you're marketing and you know you're going to go to a short sale, potential short sale listing, call me. Let me run title for you. Let me see what the status of the foreclosure is. Because I've learned, never believe a seller. They're going to tell you they have one loan, well, they have two. They're going to tell you they have no mortgages, they have five. They're going to tell you they pay their HOA, they have HOA liens against them. So it's the more you know when you go in, the better you're going to be. And I can tell you everything you need to know when you go knocking on their door. Okay? So if you call me, or you can call me and say, hey, Alan, I'm meeting at 3 o'clock with Mrs. Jones. Are you available for a 15-minute call? And I will make myself available. So we can both talk to Mrs. Jones about her options. What are her options? So she hasn't made a payment, or she knows she's going to start defaulting, and she's upside down. What are her options? Well, she can try to do a modification with the lender, but as we talked about earlier, you need to do 3 payments. Even if she does do that, what's the sense of that? If she's upside down a reasonable number, because she's also hasn't made her payment in 18 months, so now you got $50,000 added to the back end. What's the reason? The reason is, well, my kids grew up in this house. I want to live here. The emotional part of it. Okay, Mrs. Jones, we're going to smack you across the face, and we're going to make you realize this is not emotion. We're going to talk business. If you had a friend, Mrs. Jones, if you had a friend that was $75,000 upside down, was going to struggle to make the payments, what would you tell your friend? It's hard to sell the house. Well, we have a way for you to sell your house, not pay any money at closing, go to a rented apartment or a house in the same neighborhood. We'll find you a house. And then in 2 years, you'll buy again when your credit's cleaned up, and we'll get you, and you'll forget about that. And Bank of America will stop bothering you. So it's wow, I didn't know that existed. And believe it or not, people don't know this exists. They are scared to death. Bank of America keeps calling me. You know, they're calling me. I haven't made my payments. I'm avoiding the call. What do I do? So their options are to do a modification. They can do a foreclosure. They can let it go to foreclosure, which kills their credit, and also puts their name in the paper. If they have government clearance, they're going to lose that. Their neighbors know what's going on. It's really foreclosure is a tough thing to have. Military, yeah. So now some people just don't care. You know, I lost my job. My husband left me. I could care less. Let them have the house. You know, you can try to convince them that there's ways around it, but some people just don't care. But the answer is, if they do give me bank statements, pay stubs, tax returns, a few other things, I won't bother them for the next 90 days. We're just going to tell them, you know, they're done, as long as they cooperate in the beginning. So they really don't have options if they have no ability to make the payment or get caught up. So that's how that's the marketing tool. So we talked about marketing a little bit, and let me tell you, and again, if you have any questions about short sales, just scream them out. But so yeah,
I have a question.
yeah, please.
Okay, so like in this market, people are overpaying for houses, right? And then suppose somewhere down the line, a couple of years from now, they decide they have to move to another state, and of course they owe more money on their house, then can they do a short sale, even though they haven't missed any payments or anything like that?
I mean, they have to have some reason. My job's transferred me to Chicago. I'm
based on want. It's more based on necessity, not want. We want to move to the beach and retire to the beach, but
I mean,
upside down.
We get, and I always joke when I pick on millennials, we get millennials who say, well, I bought this house in Baltimore City, for $200,000, and now my job's going really well, and I'm making a lot of money, and I want to move to the suburbs and buy a new house. But my house, back then, but my house is only worth $175. I want to do a short sale. So you can't do a short sale. Why not? Because you're making, you were making $100,000, now you're making $180,000. And they said, yeah, but I've paid the mortgage company the last 5 years. They've gotten so much money from me. These conversations actually happen with people, they actually happen. I said, well, you can't do a short sale. But yeah, but the bank's gotten so much money. No. So yes, that's those people. And that's kind of how we got into the first mess. People were buying properties they couldn't afford because mortgage companies were throwing money at them, no money down, adjustable rate, interest only loans. And I'll use Mitchellville again as an example. Mitchellville is this beautiful community, but people really wanted to live there, but they couldn't maybe not afford it. So banks were given, interest only loans and adjustable rate loans and just all kinds of creative, goofy stuff. And then 10 years later, they said the loan officer would say, "Don't worry, in 2 years, this $600,000 worth is going to be worth 700 or 800 because they were going up so fast back then because it was beautiful." And then what happened was, people stopped paying their HOAs and the golf courses went to hell. So the properties that were worth 700 are now worth 425. And so I must have done 200 short sales in Mitchellville, in that Prince George's County. I mean, people that were, doctors and lawyers and people making a lot of money, but they were upside down by a lot of money. And it was all because the mortgage companies got them into these houses that they couldn't afford. So that's what's going to happen probably in 2 or 3 years from now, because people, you see it, if you're listing a house for $350,000 and next thing you know, you have a contract for 4.25. Is that house really worth 4.25? What's it going to be worth in 2 years? Things tend to go back to the mean at some point. Yeah.
Are you finding anything in this time right now where some homes are coming out of short sale because somehow or another?
Funny you should say that. So we got an office we work with that called me and she said, can you come over because we have 10 short sales we want to give you. And I said, okay, where do you want me to go to? So we made an appointment for later in that week, and she called me up. She said 7 of them sold for more, and there's enough to get these people out. So now we're down to 3. So yeah.
Carolyn had one. She had the buyers, and it was a short sale when they went under contract last October. And it was taking so long for the short sale to come through, and she was coming into me asking, telling me updates and this and that. And then we got to a point in April, and I said to her, you need to rerun the comps, and you need to call that listing agent because chances are it's not even going to get approved for a short sale now because the values went up so much. And sure enough, the buyers, after 6 or 7 months under contract, lost the contract and then we went to buy a different house because what was a short sale for months they've been negotiating now is not a short sale. So
yeah, it's really fascinating what's happening in the market. Though, are you guys seeing inventory pick up a little bit now?
Yeah.
So
a little bit of a slow.
Yeah. So yeah, it's definitely picking up, and I think that those, I'm not sure with the neighborhood, but I think it seems like it's going to level out a little bit, but who knows? It's pretty crazy out there. So
do you ever have, to the point about you said the millennials in Baltimore City that moved to the suburbs, can a person own multiple properties and have one that they just want to unload and get rid of because that's investors have come to properties.
Investors can do short sales all the time. We do them all the time.
But now they may have the tax ramification because they're not insolvent.
They're going to have they could have tax consequences.
What is that tax consequence? It looks like it's the difference between
it's ordinary income to you for the amount that you short the bank.
Okay.
For an investor, if they own 5 other properties that have equity, they would not be what's called insolvent. When I mentioned earlier, their assets are greater than their liabilities, so they may have tax consequences. Now, if it's one person that just has an investment property, they may be able to avoid it.
So if it's like $70,000 underwater, the tax hit against that is
$15,000-$20,000.
So they may look at that and say, okay, I'll pay that out and get rid of the other.
Yeah, they may decide to do that because honestly, I'd rather owe the IRS than the mortgage company because the IRS you can work with, you can pay them $10,000 a year. Mortgage company, you're going to get a foreclosure, then you're going to get a judgment against you, and all your other properties might be at risk. So we just go through all the consequences with that. So I wanted to spend a few minutes talking about marketing for short sales. I talked about notice of defaults. So we are really blessed in the state of Maryland because notice of defaults are public record. So we can, well, I'll just,
Put it up there. We need,
I was gonna say we could pull up Realty Track.
yeah, we also have Remind.
Oh, I don't
Are
know.
you familiar
Remind.
with Remind?
No, but I'm familiar with Realty Track. I mean, I do
Okay.
Realty Track all the time.
So Remind is through Bright, and it's another tool that also showed or. But yeah.
So Realty Track's through Bright also.
Yep. Yep.
Alan, just to go back a little bit,
Yeah.
how did the forbearance rules work? Did they,
So back in the year, so back March of 2020, when this nonsense started, the government gave the first bill that came out gave people the right to call your mortgage company and say, I need a forbearance. And June 30th. That's what it is. So on June 30th, banks are going to call and say, okay, Mrs. Jones, fun time's over. What do you want to do? Either you can write a check for 18 months worth of mortgage, or we can add it to your back end, and you're gonna make 3 payments. If you make 3 payments, then we'll add it to the back end and we'll permanent it. But if you miss any of those 3 payments, back to foreclosure.
so interest kept accruing
Oh, yeah,
and
yeah.
everything, and so.
Yeah.
Okay.
Yeah, it's, people that thought they had equity no longer have equity because, again, if it's a $3,000 a month mortgage payment, that's 18 months at 50 grand added to the back end. So,
And all these mortgage companies kept sending you out notices and notices, like, oh, great, why don't you go in forbearance, and I'm sure there's waves of people that fell for it.
oh my God.
So,
I know people that
I
didn't.
know I got those letters.
I got it too, and my wife was like, "Why don't we just do it and not pay our mortgage payment for 18 months?" It's like, okay, then knowing you'll spend all the money. But yeah, it just gets added on. I mean, for people that needed it, that had a short term, for restaurant workers and people that weren't able to work, it was a great it was great. But for people that didn't need it, but a lot of people took advantage of it. So the one thing I didn't talk about is how long do short sales take? And I generally say, well, they're anything but short. But I tell people that they take 60 to 75 days from date of contract. That's when the clock really starts ticking. We want to get involved date of listing, but the clock starts ticking on date of contract. Okay? So 60 to 75 days. And if you are a listing agent or you're representing a buyer who's buying a short sale, here's a couple of things you want to know. You don't want no contingencies, none. If I get a contract that says contingent on Mrs. Jones selling her other property, bank's not going to take it. I'm not taking it and I'll tell you why in a minute. No contingencies. I want financing from a financing company, either you as a listing agent or I have heard of. I don't want it from, Joe's gas station is going to lend them money. I want to see a real deposit. And I don't know what's happened in your industry, and I don't know what happens in this brokerage, but I see people putting contracts in for $350,000 houses with a $100 deposit. I'm telling you, I don't know where their quality control is with their office, but I see it all the time. Or I see no deposit, and they'll put a deposit up when when the short sale is approved. Well, those of you who have sat through a contract class know that's not a valid contract because there's no consideration. So, I go to the broker and I say, hey, who's doing your quality control looking at these contracts? Because you get investors who want to buy short sales, he'll throw $100 up deposit. They just want to throw what against the wall, and in 60 days, if they still want to buy it, they'll buy it. Otherwise, they'll either lose their 100. So that's what happens. So I want to see a real. What do you got? 5%?
Well, we usually say one to 2%.
I'm sorry, I meant one.
Yeah,
1%.
1 to 2% of
Yeah.
purchase price.
I mean, it's got to make them feel some pain, because people $100 they ain't doing anything. So no contingencies, real deposit, inspections, whereas as is. Inspections take place within 10 days of date of contract, not 10 days before closing. Oops, sorry about that. Someone's at my front door. So none of that. Inspected whereas as is, because especially if the property's vacant, property's going to go down. Hopefully, as a listing agent, you're going to keep the heat on and cut the grass and make sure it doesn't fall apart. But we want it basically as is, whereas. Okay? But if everybody cooperates, we should be able to get a short sale done in 60 to 75 days from date of contract. And the other thing, we generally will not talk to buyer's agents. So if you work with us, you'll get an email from us. We have 10 processors that work for us, and they are touching your file at least once a week. We have a manager that oversees them. They're touching the file at least once a week. So when they touch the file in our system, they write a note that says, talk to the lender, being submitted to underwriting. That automatically goes to everyone on the file. It goes to you as the listing agent, goes to the sellers. It does not go to the buyer's agent. And the reason we'll do that is because of me, basically, because I might write, Mrs. Jones is so damn stupid, she won't send me her bank statement. And then all of a sudden it's going out to everybody in the transaction. So they don't, I don't type into the system anymore because you'll never know what I'll write. But our processors will, and then when the file heats up and things are going, you'll hear from them 2 to 3 times a week. Talk to the bank today, submit it to the investor, we should have an answer tomorrow. Talk to them today, it's not out yet, but hopefully by 5 o'clock. You'll get emails constantly. So one thing I will tell you is you will not have a problem with the communication. We expect you to talk to the buyer's agent. We are not going to talk to buyer's agents. Unless, of course, it gets desperate and the buyer's agent's saying, listen, what's going on? Then I'll talk to the buyer's agent. I'll say, hey, listen, this has been a complicated transaction. It's a government loan, FHA. We had a bad appraisal. We got it all cleaned up. Mrs. Jones cooperated, and we're close. And I'll try to keep the contract alive. And the reason I don't want contingencies, and this is really, and I should have said this earlier. So if Tina contracts to buy my short sale in her name, and we go down 60 days down the road, and then we get it approved under Tina Hyde buying it, and then Tina says, you know what? Or what? Her bank says, we checked her credit again, and she bought a new car. And you probably have seen that happen on a traditional sale. And her debt ratio is now, she can't afford it. We can't qualify her. So, and you say to me, no big deal. I've got another buyer that's going to pay the same exact terms. So you send me a contract, and it's going to pay the same amount. And I give it to the bank and say, new contract, same terms, same net, meet your approval letter. They say, no, we're going to start over. It boggles me. I've been on seminars where I've spoken with Bank of America and Wells Fargo, and during the breaks, I always say to them, why do you care? If you buy it or if you get the same amount, and they really don't have a good answer. But the answer is they want to look at the contract, they want to look at the financing, or if Tina now says, I need to add my brother to the transaction because I can't qualify without him, we have to go back, and it's not starting over, but we're probably another 30 days away where they want to look at everything for her brother. So we don't want to waste time with a buyer who's not serious. That's really the moral of the story. So these investors that throw $100 deposit, and they've done it for 10 transactions, and they'll just decide which one they want to buy. You and I have wasted 60 days, and now we got an approval, and the buyer says, I'm not interested anymore. Okay?
You will take financing contingency, just not home sale or.
Well, we want finance contingency, but we want a pre-approval. We want a pre-approval from a lender that we all know, or that somebody knows.
Yeah.
Okay? So this is, if you didn't see, but if you go into your Bright and you can get to Realty Track. Has everybody ever done that before?
You go to search at the very bottom of the search drop down is where you find Remine and HomeSnap. Well, there's find foreclosures.
Foreclosures.
And when you click on foreclosures, it takes you into Realty Track. It's a free product that you get with your Bright subscription.
So you said Remind is something I should look at?
Remine
I'll look at
is
that
another
later.
one.
Okay.
REMINE.
Okay, so if you go into this, so I started saying earlier, so state of Maryland, notice of defaults are the first step in a foreclosure process. And we're blessed in Maryland because they're public records. It's one of the only states that's public record. So if a bank wants to send Mrs. Jones a letter saying if you don't pay, they have to file with the Secretary of State. Realty Track will put it on their website. So I'm going to show you what you do and how I think marketing starts. So yeah, I need a.
I know, I don't have a mouse.
Can you just pick a zip code down where it says
Yep.
search by zip code? Blue, the red. Okay. So we've just put in what zip code?
21228.
Okay. So then you're now getting an unclick. So what I'm going to do is unclick auctions and unclick bank owned. So now we have pre-foreclosures in this zip code. And you see there's 62.
No.
Okay? I
Yeah,
guess you're looking at that.
62, yep.
Okay, so the first one you put up is Spring Great Road. If you click on, actually, there's no details there. So let's go to the one below, the Meadow, whatever that is.
Medwood
There's a
Park.
few details. So they're telling you, so if you're looking for a short sale, they're telling you this property is worth about $168,000. And if you go down, it tells you that they owe total loans of $167,000. See that? So here, I'll put it up here.
Yeah.
Value is about 168. We don't know if that's right or not, but it's close. And their loans are about 167. And that's before they've had arrearage that's been accruing for the last few months. So, okay, great. So now we know that the owner, Allison Wooner, who lives at the property, has no equity in the property, and she's in default. And the bank's foreclosing on her. Right? We know everything you need to know to go get a listing. Okay? So we now reach out to Mrs. whatever her name was, Warner, Woocher. Hey, Allison, how do we reach out to Allison? So I'm sure you all have your own marketing, but we've hired a marketing company. My current partner used to own an exit franchise in Nevada. And in the first set of foreclosures and short sales, they were ahead of us by about a year or two. So he hired a marketing company to say, how do we reach these people? And they came up with, and we tweaked it, and I'm going to leave a few copies here. No, never mind, that's not it. Hold on a second. Here it is. Leave one and then copy it. Or if you email me, I'll send it to you. But basically what this is, what we've learned is, and you guys know this from marketing, that the way to get these people is not, hey, Mrs. Jones, I want to list your house. It's, hey, sorry you have this situation going on. How can we help? Because every realtor in the world wants to list their house. So you want to reach out to Allison and say, hey, Allison, you're in this mess. We already know that you're upside down. You have no equity. You're in foreclosure. What can we do to help you? So we come up with 3 letters. And they're in here. And again, I'll list it here. And the first one says, I'm not going to bore you with the whole thing, but the most important thing you can do is you want to stand out. So what we suggest is you buy red letterhead, a red stationery, or blue, or yellow, or green, or something that's not normal. And you send in the first letter in the envelope. And it says, Dear Mrs. Jones, or Allison, bad things happen to good people. I want you to know I'm thinking of you. And then the next thing you can say to them, and I think it's true, everyone can say it, I'm no stranger to financial hardship. Because is there anybody in this room that hasn't at some point or another had something going on in their life where they've, I know I have, all of a sudden the kids need braces or the car breaks down and you're in, business is bad for 3 months and what the hell am I going to do? So you're not lying to them when you say, I'm no stranger to this. So bad things happen to good people. I'd like to have the opportunity to discuss with you. Here's my name. Give me a call. Probably not going to call you. Probably not. They're avoiding it. They're dismissing it. It's going away. The tree's going to grow out back with money and I'm going to come out of this mess. So then we're going to send them a second letter. That same orange, yellow, green, whatever it is. So they've already seen your craziness and they're going to send it to see it again. The second letter, and it gets a little comical now. The marketing people suggested you want to make sure they open it. So the way you get them to open it is you put a little piece of string in there. Go to the hardware store and buy a thing of string, and you put it in there. So when they feel the letter, they feel something inside.
What do I call that? You guys should know this. Lumpy mail, right?
What do you call it?
Lumpy mail.
Lumpy mail.
Send lumpy mail.
Right. That's funny. That's a good way to say it. And it costs you 10 cents. And you send it in there, and then you say, okay, Mrs. Jones, why did I enclose a piece of string? 2 reasons. Well, first, I figured you'd feel the lumpiness and you'd open it. And the second is there's an old wives' tale, if you tie something around your finger, string around your finger, remind you to do something. Well, hopefully you'll tie this around and you'll remember to call me. And okay, and then you give them this whole letter and you go through it again, and they may or may not call you. And then now a week later, so you're now 2.5 weeks or so into this process. You're going to send them a third letter, same orange, yellow, green, whatever it is, and this one's going to be lumpy again, but it's going to have a toy watch in there, which you can buy for 20 cents also. Anybody that's ever had birthday parties, or what's that company? Trading, something trading.
Yeah, Oriental Trading.
Oriental Trading, right. You can go in there and buy 50 watches, 50 toy watches for $6 or something stupid like that. And you put it in there. And, hey, Mrs. Jones, why did I send you a toy watch? Because time's ticking. You're now a month further into this, and the bank is coming. And you can avoid this as much as you want, but you need to remember that they are coming after you. And I'm here to tell you that I can help you get out of this. And they may or may not call you. And then the next thing we do, and then, this is up to personal preference what you do, but I can tell you it works, is you say, I'm going to be in your neighborhood 4 o'clock on Saturday. I'm going to stop by. Now, I don't know how you all feel about door knocking, but it works. It works.
It works.
It works. Not everybody's comfortable doing it, but, take your big brother who played football in high school with you, but it works. And you're going to go there, and they may not answer the door, or you're going to be known as the crazy orange lady because you sent them 3 letters with orange, and they're going to recognize you, and they may take you in, and we see that people will welcome you in their home and we are basically seeing a 1.5% return listings out of 100, 1.5.
Wow.
So if you get 1.5, if you send 100 of these out, and you get 1.5 listings, or one listing that's in this community is a $500,000 community, you're going to make $15,000. I think it's worth $300. So that's what you're saying. And you're going to go there and you're going to have talked to me. So you're going to know that Allison is upside down. I'm going to tell you about her HOA. I'm going to tell you how far the foreclosure is. I'm going to tell you what else is on her house that she owes. She's got a judgment against her with Bank of America, Visa, whatever it might be. I'm going to tell you everything you need to know. And you're going to do your homework and you're going to say, well, that house, obviously you don't know the condition of the house, but you're going to say that condition of the house is not worth 168. It might be 180. So you're going to say, okay, we can sell this for 180, but even at 180, you're only going to net 150. You're still upside down. So what are your choices, Allison? Your choices are let the bank foreclose or come up with a crap load of money and pay it. What can you do? And she might not even know that how far along she is in the process. And she might, maybe she lost her job. And you're also going to look on her counter and you're going to see 3 certified letters that I promise you she hasn't opened. And that's how you build. I think you build a listing business. And I'm sure you've been through this,
Yep. Several of our agents, and I was hoping you were bringing your marketing plan, because several of our agents used this marketing plan back in 2010, 11, 12, 13.
Bob Fry did it all the time.
Yeah, Bob Fry. You guys know Bob Fry, right? Number 2 agent in the office. Dennis has done it, so it works.
It works. It really does work.
Works.
If you're a busy agent and you want to build a listing, hire an intern to send out the letters, to do this. Hire an intern for $8, $10 an hour to sit and send out the letters. Now the letters, as you'll see, we suggest that they get written in a one of the fonts that look like handwriting. You don't do it, so it looks personal. And the goal is, and again, you guys are the marketing people, but the goal is you want to befriend them. You want to have a relationship with them. And if you decide, or we decide, or you decide, or they decide that modification is the better way to go, God bless them. Because I promise you, that as sure as I'm sitting here, that in 6 months they're going to call you and say, I defaulted on my modification. What do I do? Because modifications do not work. If I thought they worked, I would have done them, and I'd be lying on a beach right now because people charge a lot of money for them. But even lawyers have some scruples. I don't believe in them because I don't think they work. Because I would say that 90% of the people that do modifications default later on. Because if they defaulted once, they're going to default again. Either they don't make enough money to afford their house, or their money management, it just stinks and they can't afford it. So they have a BMW in the garage, but their mortgage is in default. So those people, they're going to default again. So even if Mrs. Jones says, I'm going to do a modification, great, Mrs. Jones, congratulations. I'm glad the bank did a modification with you. But keep my card, and in 3 months you call her and say, how's it going? Oh, well, I missed my November payment. You're done. There's no coming back. So now you go back over there and you have a listing. So that's the way we think you build listings. And we saw 62 in that one zip code.
Yeah.
Now, some of them might have been old. I didn't really look back. But some of them might have been from 6 months ago. But it's growing and growing and growing. And if you pick, what area was that?
228.
Which is where?
So, Baltimore County.
Baltimore County. Nice area?
A nice area.
Okay. So if you pick, Baltimore City, I can tell you there's hundreds and hundreds if you want to farm Baltimore City. If you farm, Laurel, Bowie, we talked about Mitchellville. Do you do a lot of Prince George's County stuff in this office?
Yeah, some of our agents work in Prince
Okay.
George's County.
So parts of Anne Arundel County, parts of Howard, well, you're in Howard County.
Montgomery,
Frederick, I know, Bob and I'm always sending Bob stuff I see in Frederick County. So there's just, it's out there. If you want to put the effort in, it's out there, and it's growing and growing and growing. So, it's a lot of work, and I've learned, the last year when business has really been slow, I've been marketing these people. And it works. It definitely works.
And not to mention, some of you have investors that look for rehabs, flips, rental properties, and you can't find them inventory, right? Or the inventory is so overpriced, overvalued, it's not an investment for them. This is a way to find and create inventory for your investors, and they go under contract at the same exact time that you're going on the listing appointment. Not only do you walk in and say, I can help you sell your home and get out from upside down, but I also have a buyer, and Ralph, you present the contract at the same time you're taking the listing. And then you go under contract and everything goes over to Alan Weiner. And
But you do need to list it. You do
Yes.
need to put it in MLS for a bit.
How
You might
long-
already have a pocket contract.
How long does it have to be in the MLS?
Each lender is different. I would say a week. But you don't even have to have showings. You can say, you don't have to allow showings. I don't know if you get fined. You get fined for that? You do? Okay.
Yeah.
Okay. Well, we don't want to do that.
Yeah.
But you can go through, I'm sure you've done it. You can go through and say the ones that are already under contract. They discourage you. Call first, dog in the front driveway. But it doesn't matter. It doesn't hurt you like you said, Rob goes in with it. He's already got Mrs. Jones. What do you think the property's worth? 180. I owe 200. Well, I think I might even have a buyer for you. We can get this thing closed.
Right. That's the position we're in right now. We have so many buyers, and it's just sometimes when a listing comes along, you're like, oh my gosh, this is like lightning in a bottle. So it's not like we're doing anything illegal. We're not,
No,
waking
of
up
course
and saying,
not.
okay, I'm going to do something. It's just this is the market we're in right now because buyers need homes. They just do.
And again, as I said earlier, one second. What I said earlier is this Allison, I'm picking on poor Allison. She's scared. I can promise you she's frightened of what she's going through. Because we all would be. Real quick story. My dad is elderly, but I did a reverse mortgage. He did a reverse mortgage maybe 15 years ago. And my brother is a business person. And one day I was at the gym and my phone rings and I ignore it. And it rings again and I ignored it. And then it rings again. So my brother texts me, call me immediately. So I call him. God heaven knows what happened. So what's the matter? He goes, Dad got a letter that they're foreclosing on his mortgage. I said, well, you can't foreclose on a reverse mortgage. So that's not true. As long as he's alive and living there, they can't foreclose. So what's going on? So he got a letter that Wells Fargo, his servicer, was selling the loan to whatever other company it was. And my brother, who's a business person, and my father read that he was losing his house. So so that's the people are frightened of this stuff. They even the smartest, not that my brother's not smart, but even the sophisticated business people, the people that are not frightened of it are the people that know how to play the game. So we've gotten people that have tried to do short sales, that we get down the road and they are delaying, and they just want to stay in the house as long as possible. So because they know how to play the game.
While you're on the topic of reverse mortgages, I got a question. I've asked a lot of people this question
Right.
after I heard it from an agent that specializes in selling bank-owned reverse mortgages. Is it correct that I guess there is a federal law within them that you can't offer $1 less than whatever that asking price is set. It's like, there's no.
Well, you can, but they're not going to take it.
Correct.
The
You're
bank's not.
wasting your time.
The bank is going to the reverse mortgage, as I said earlier. They're going to set it at 96% of market. So if you owe $300,000, let's make it easy, $100,000, they're going to set the price at $96,000. They are not going to take $95,999. They want $96,000. So
I asked them now. I literally looked at the bank on property. I'm like, hey, is it reverse mortgage or anything? Just because I don't want my client just to not knowing, hey, they could get to that number because it's wasting your time.
yeah, we can. Again, it's public record. I can tell you if it's reverse mortgage. Yes, you had a question.
Um,
Oh no, the lady. I'm sorry.
Oh, no, so, when you were talking about having a buyer already, you know, as you said, short sales are not short. So how do you, do you have any tips, if I do have a buyer that's interested in short sale, that I tell them, look, this is the process, it's
No.
not gonna be short, but we will get there.
So great question. Thank you. So here we are. Let's call it July 1st. Next week's July 1st. You have a buyer you're working with that wants to buy a house because they want to have their kids in school by September. They want to be located. They don't want to buy a short sale because they're not going to get in. So you need a buyer that's going to say, okay, if it's 4 months, I can live with 4 months. I can go month to month where I am if I'm a renter, or I can live with my parents. I can live with my family for a while. But if they have to be out of their house on a certain date and they have no place to go, a short sale is not for them. And if it's another buyer that's waiting, if you just keep them engaged, is what I find. As long as they know what's going on, they don't think that their contract is gone and forgotten, which is your job. Just keep them engaged. And if you're the listing agent, you want to keep the buyer's agent engaged. Hey, buyers, want you to let you know, tell Mrs. Smith that her contract's still being reviewed. But we're in touch with Bank of America. Our negotiator is in touch with Bank of America. There's only one loan. Everything's been submitted. It's in underwriting, and we're checking every day. And as soon as we have an answer, you'll be the first to know. But if you don't call them for 30 days, that's when they get worried that something's going awry. But if they need to get into a house, by school day or by Christmas, if it's October, and they sure says not for that.
My second question was, in order to get the market impacted,
Oh yeah, I'll give you my card. My email is awein555 @gmail. Here's my card.
thank you. Now, everybody, pictures are cool.
Right.
And pick your color envelope, I'm going orange. It's my favorite color.
I'm going to leave one of these here, but this is just a hard copy. But if you want to email me, I'll send you the electronic copy so you'll have it. But it's a lot of work. I'll tell you, it's a lot of work. But that's why there's a lot of agents that don't do any business because they don't do the work. We all know agents that don't do the work. But if you want to do the work, if you're tired of driving people around the Beltway to show them houses, and you want to become a listing agent, this is a good opportunity to become a listing agent. It really is. You get three or four of these. I've seen it happen. People go from, just do the work. The one thing, I'm not a big fan of Keller Williams, their systems, because it's a little bit crazy to me. But there was one guy at Keller Williams who I knew when he first started. He was just an agent that, at 3 o'clock he was playing golf. And he started following the Keller Williams model of, what do they call it? Your sphere of influence. And there could be a tornado in his office. From 9 to 11, he was making his calls or doing whatever he had to do. And he became a really successful agent. So, I'm sure Tina will give you that pep talk. But if you do the work, it works. And we will assist you in any way we can. Even if we're not getting this deal, or even if we're on the buyer side and you have questions, just call me. Now that the world's opened up, you'll see me around here a little bit more. But call me anytime. My cell phone number is on that. Actually, it's not, but it rings to my cell. It rings directly to my cell. So you don't have to worry about it. Everything rings to my cell. So when I pick up, unfortunately, all the time. So you guys are used to working every Saturday and Sunday. I don't like it. But I will pick up my phone. Yeah. Want to have a question?
To piggyback on that, I mean, you said Bob Fry did this system and did the marketing pieces. Santi also did a lot of short sales years ago, and he became very experienced and very good in short sales, and he marketed for them. So I think it speaks volumes that the number one and number two agent in the office, both of them, marketed consistently for short sales and took their business from mid-level to top-level producers. And they built their sphere of influence all while doing it.
And another thing is, a lot of agents don't want to touch it. I mean, they're successful agents. I mean, you'll get, these snooty people in Long and Foster have been doing it for 40 years. They don't want to do it. They're not going to look at it. So they're going to pass on, even if it hits them in the head, they don't want to do it. So it's the hungry people that want to build, 8 years ago, Bob was a relatively new agent, I assume, right? And this is what, so it's a great opportunity. It really is a great opportunity and it's coming. I mean, we can see the market changing. It might not be like it was in 2005 where every deal was a short sale, but it's coming. It's definitely coming nationwide. If you read, Wall Street Journal and New York Times, I mean, it's definitely coming.
If we weren't in the office meeting last week, 2 of our agents have 3 short sales already in the works. I think Dennis has 2 with you.
Yeah.
And Jeff Joyce had a listing he was getting ready to sign for short sale. There's all 3 out of mortgage forbearance.
So yeah, the interest, Dennis has one that we weren't involved. He got the approval. It was in bankruptcy. It was just a disaster. And he called me and said, basically, can you help? And there was an HOA lien. There was like 5 liens on the property, HOA liens, all kinds of stuff. And we negotiated them. I was able to literally get every one of them resolved. Who's it?
It's Michelle Marino. I think we're not muted, maybe.
So we were able to negotiate. We didn't talk. We're gonna, we've gone past your time. I'll tell you real quick. But HOA liens. HOA liens can be actually. This person also had a state of Maryland judgment tax lien. We got them all resolved, and now we're just waiting for the bankruptcy court approval, and then it's going to go to closing. It should be. I think the hearing is with the bankruptcy court is June 29th, and they're going to go to closing, and we negotiated them all. And I think Dennis even tried to do that one. He might have gotten the approval early on. I don't remember how it worked, but he got me involved late, and we negotiated all the approvals. But HOAs, we can deal with. So if you go to, generally people aren't paying their mortgage, they're not paying their HOA. We find. HOAs are just a negotiation. They're really hard. I mean, I always tell my wife on my tombstone, it's going to say killed by HOAs because I spend a lot of my time fighting with lawyers from the HOAs because they know that you as the agent want to get the transaction done. The bank is going to give them 3 months. These people might not have paid for 3 months, 3 years, 7 years. I mean, some of these small HOAs, they don't go after people. But all of a sudden, they want 5 years worth of HOA payments. And they refer to an attorney, and the attorney knows, well, Exit's making $18,000 here. They'll be happy to make $12,000. They would give $6,000 to the HOA, and they're happy. So we spend a lot of time negotiating. Another reason I tell you the list is 3.5%. So so again, I will be able to tell you everything that's going on with that property before you knock on the door. Okay? Thank you for all your time, everybody.
Thank you very much.
There's one here.
And thank you for lunch.
Oh, yeah.
Make sure you guys
Didn't
grab
go
a
very-
sandwich.
Thank you so much.
Thank
Bye,
you.
Michelle. Thanks
Bye.
for joining.
Take care, guys.
You
Thank
too.
you.